Have you ever wondered how a loan meant to help someone in a tough spot can end up trapping them in debt for years? It sounds impossible, right? But that's exactly what happens every single day in America. Today, we're diving into something that most lenders never want you to truly understand: the shocking truth about predatory lending. Number one, what is predatory lending, really? Imagine this. You need a few $100s to fix your car or pay rent. You search online for a quick loan and find one that says instant approval, no credit check. It sounds perfect, but what you don't see are the traps hidden in the fine print. Predatory lending is when a lender takes advantage of borrowers by charging extremely high interest rates, adding hidden fees, and setting unfair loan terms. The goal isn't to help you. It's to keep you in debt for as long as possible. For example, payday loans often promise fast cash, but many of them come with annual percentage rates of over 400%. That means if you borrow $500, you could end up owing over $2,000 before you even realize what happened. These lenders use your desperation against you. They know you need the money fast, and they use that pressure to make you sign agreements that are designed to fail. Number two, the typical victims and why it's not their fault. Predatory lenders don't go after wealthy people with strong credit. They target everyday Americans, people who live paycheck to paycheck, people who have medical bills piling up, people who don't have access to traditional bank loans. It's not because they're careless. It's because the system often gives them no other choice. According to the Federal Reserve, nearly 40% of Americans would struggle to cover an unexpected $400 expense. That's the perfect opportunity for payday lenders to step in and say, "We can help you. Just sign here." They set up shops near low-income neighborhoods, military bases, or online, where they can reach people who are already vulnerable. And the results are devastating. Number three, how the debt trap works. Here's where things get really sneaky. Let's say you take out a $300 payday loan. You're told to pay it back in 2 weeks with a fee of $45. Sounds simple, right? But what if you can't pay the full $345 on time? The lender offers to roll over the loan, meaning you can pay another $45 fee to extend your due date. You think you're buying time, but really, you're sinking deeper. Now you owe even more, and the cycle repeats every 2 weeks. Eventually, you've paid hundreds of dollars in fees without ever touching the original loan balance. This is how predatory lenders make their money. They don't profit from helping people pay off loans. They profit from people who can't. Number four, the psychological trap. Here's something most people don't talk about: the emotional side of predatory lending. These lenders are experts at using psychology. They make borrowers feel embarrassed, guilty, or scared to ask for help. You'll see words like instant approval or trusted by millions to create a false sense of safety. The idea is to make you feel like you're making a smart choice, even though the deal is terrible. Many borrowers also fall into what's called the shame loop. They blame themselves for being in debt, when in reality, they were set up to fail. If you've ever felt trapped in a loan that seemed impossible to escape, you're not alone. Millions of Americans are caught in this same cycle. Number five, common types of predatory loans. Predatory lending isn't just about payday loans. It takes many forms. One common example is title loans. That's when you hand over your car title as collateral for a small loan. If you miss a single payment, the lender can take your car, even if you've already paid most of the balance. Another example is refund anticipation loans. These are advances on your tax refund, often with huge hidden fees that eat away at your refund before you ever see it. There are also rent-to-own agreements, subprime auto loans, and certain cash advance credit cards that trap borrowers with fine print terms and massive penalties. The key is always the same: make it look helpful on the surface, but make it nearly impossible to escape underneath. Number six, real-life example of how it happens. Let's talk about a real story. A woman named Sarah needed $400 to pay her utility bills. She took out a payday loan with what she thought was a small fee. 2 weeks later, she couldn't pay it off, so she extended it, again and again. Over 6 months, she paid over $1,000 in fees and still owed the original $400. When she finally fell behind, the lender withdrew money directly from her checking account multiple times, causing overdraft fees and leaving her deeper in debt. Her story isn't rare. It's typical. And it's exactly how predatory lenders keep people trapped. Number 7. Why traditional banks aren't always the answer. You might wonder, why don't people just go to a bank instead? The truth is, many can't. Traditional banks often have strict credit requirements, long approval processes, and higher minimum loan amounts. If you have poor credit or no credit, they might reject your application entirely. That's what drives people to payday lenders. Not because they want to, but because they feel like they have no other choice. That's why financial education is so important. Knowing your alternatives can save you from a financial nightmare. Number 8. Safer alternatives to predatory loans. Now let's talk about the good news. You do have options. One alternative is credit union loans. Credit unions often offer small dollar loans at far lower interest rates. Some even have payday alternative loans designed specifically to help people avoid predatory lenders. You can also talk to your employer about paycheck advances or look into local community programs and nonprofits that provide short-term financial assistance. Another option is a personal loan from an online lender that reports to credit bureaus. That way, as you pay on time, you actually build credit, instead of just paying endless fees. And if you're truly struggling, credit counseling services can help you build a plan to get out of debt safely. Number 9. How to spot a predatory lender. Spotting one isn't always easy, but here's what to watch out for. If a lender doesn't clearly tell you the total cost of the loan, that's a huge red flag. If they pressure you to sign quickly or promise no credit check guaranteed, walk away. Also, if they want access to your bank account or your car title immediately, that's another warning sign. A legitimate lender should give you time to read the agreement, answer your questions, and never use threats or intimidation. Number 10. What laws protect you? In the USA, there are regulations to help protect consumers. The Truth in Lending Act requires lenders to disclose the full cost of a loan, including fees and interest. The Consumer Financial Protection Bureau also monitors payday and title lenders, enforcing penalties when they break the law. Some states have even banned payday lending altogether, setting caps on interest rates and limiting how often loans can be rolled over. But not all states have the same protections. So it's crucial to know your local laws before signing anything. Number 11. How to break free from the cycle. If you're already stuck in a payday loan trap, there are ways out. Start by contacting the lender and asking about payment plans or hardship options. Then, reach out to a nonprofit credit counseling agency. They can negotiate with lenders and help you consolidate your debts into one manageable payment. Some states also offer debt relief programs for payday loan victims. And if your lender broke any laws, you may be able to report them and have part of your debt forgiven. The most important thing is not to ignore the problem. Every day you wait makes the debt harder to escape. Number 12. How to protect yourself in the future. The best protection is preparation. Start building a small emergency fund, even if it's just a few dollars each week. Work on improving your credit score so you can qualify for safer loans in the future. And most importantly, always read the fine print, even when you're in a hurry. If something sounds too good to be true, it probably is. Number 13. The hidden cost of quick cash. Predatory lenders love to use words like instant approval and get cash now. But that convenience comes at a massive cost. When you take a payday loan for a few $100s, the lender makes it sound like you'll just pay a small fee. However, that small fee is often the same as paying an interest rate of several 100% per year. That means if you borrowed $300, you could end up paying over $1,000 before you're done. The faster the money arrives, the faster the debt grows. And that's exactly how these companies profit. They sell you speed but make you pay for it again and again. Number 14. How lenders use confusing language. Predatory lenders are experts at making bad deals sound good. They'll say low fees, but they'll hide the actual numbers deep inside legal language most people don't understand. They'll use phrases like credit protection or financial safety to disguise hidden insurance costs or extra charges. They might even claim that paying on time will improve your credit, even when they don't report to any credit bureaus at all. It's all part of the illusion, to make borrowers feel safe while they're being taken advantage of. If the loan agreement sounds confusing or vague, that's not an accident. It's a tactic. Number 15. How they target online borrowers. The internet has made it easier than ever for payday lenders to reach people. They create slick websites with friendly photos, fake reviews, and easy apply now buttons. Many borrowers assume that if a website looks professional, it must be legitimate. But behind the scenes, some of these lenders operate outside USA laws, even from other countries. That means once you sign the agreement, you may have no legal protection or way to dispute unfair charges. Always research the lender's location and check if they're registered in your state before giving out personal information. Number 16. How predatory lending impacts communities. Predatory lending doesn't just hurt individuals, it damages entire neighborhoods. When people get trapped in endless debt cycles, they have less money to spend locally. Small businesses lose customers, families fall behind on rent, and local economies weaken. Studies have shown that payday lenders often cluster in areas with lower income levels and higher minority populations. This creates financial deserts where people have few alternatives, and cycles of poverty continue for generations. Predatory lending isn't just a personal issue, it's a social one. Number 17. The role of technology in debt collection. Modern lenders don't need to send debt collectors to your door anymore. They use technology to withdraw money directly from your bank account the moment your paycheck hits. If you miss a payment, they can trigger multiple withdrawals, causing overdraft fees that sink you even deeper. Some lenders even use text messages or automated calls to intimidate borrowers into paying faster. This kind of digital pressure keeps people anxious and scared, which is exactly how lenders maintain control. Number 18. How loan stacking makes things worse. When borrowers can't pay off one loan, many take another to cover it. This is called loan stacking, and it's one of the most dangerous debt traps. You might start with one payday loan, then take a second to pay off the first, and a third to cover bills. Soon, you're juggling multiple loans from different lenders, each charging massive fees. It's like using one credit card to pay off another, but worse, because payday loans don't stop compounding. This is how financial chaos begins. Number 19. The emotional roller coaster of borrowing. Predatory loans often start with hope. Borrowers feel relief because they finally have money to solve a short-term problem. But that relief quickly turns to stress when they realize how fast the debt grows. Anxiety builds as calls and emails start pouring in from lenders demanding payment. The constant fear of losing your car, your paycheck, or your home can take a serious toll on mental health. Many borrowers say that dealing with payday loans feels like living under constant pressure, and that's exactly how lenders want it. Number 20. Why financial education is the ultimate defense. The most powerful weapon against predatory lending isn't a lawyer or a law, it's knowledge. Understanding how interest rates, loan terms, and credit scores work can prevent people from ever falling into these traps. Even basic budgeting skills and awareness of local resources can make a huge difference. Schools, community centers, and even employers can play a huge role by teaching financial literacy. When people understand their money, they make stronger choices, and lenders lose their power to exploit. Predatory lending thrives in silence and confusion. The more you understand how these traps work, the harder it becomes for lenders to exploit you. Now that you know the truth, what do you think is the most dangerous part about predatory lending? The money trap or the emotional manipulation behind it? Share your thoughts below.